From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for March 6, 2017. I hope you had a great weekend and are ready to get started trading this week. In today's video, I'm going to do a general overview of each U.S. currency pair in anticipation of this week's trading. And I'm going to highlight some of the key levels that we will be looking for entry and exit opportunities. This week, there are several significant news events throughout the week, and you will want to make note of them on your news calendar as they happen. And as always, be sure to use appropriate risk strategies in all trade setups. Let's go ahead and jump right into the USD CHF, the US dollar versus the Swiss franc. We're looking at the daily time frame. We have two different trends that we're looking at here. The black trend line, which was the downtrend. Basically, January was the downtrend that we're looking at under the black trend line. Then, beginning of February, we started moving higher, and so far here in March, we have an overall dominant theme of a rising trend along the red trend line. Even the Forex Black Book over the past couple of weeks has turned green, signifying bullish momentum. So we have the green Forex Black Book trend bar, the red trend line. If you're going to trade in the direction of the trend, and by the way, we're also above the 100 period simple moving average. If you're going to trade in that direction, you're looking for buys on dips to support or breakout of resistance. Now, on Friday, we did have a pretty significant pullback for the US dollar, falling all the way from the 1.0140 level back down into the 1.007560 level, but it did have a pullback. That gives us really, in the direction of a trend, a much better opportunity to go long. Let's go ahead and zoom it in one time here on the daily time frame, and here's what I'm talking about. This big red candle all the way back down to the yellow zone from the orange zone. Back down to the yellow zone. We're challenging down here now, closer towards the red trend line. So it gives us, again, an opportunity to look for a long opportunity. Down here towards the moving average, down towards the trend line, gives us an opportunity to go long. Let's watch for those opportunities as it settles down here into support, 1.0075, 1.0060. Of course, your current resistance will be 10100, 10115, the current little green shaded area you see right here. We've seen resistance there before. All you have to do is look back here. And of course, above there, we know that the main resistance is the orange shaded area. And if we can ever break above that orange zone, we'll look for a new high in the direction of our current trend. So for the time being, I would have a difficult time going short and selling this currency pair on top of the yellow zone, which is our current support, because of the direction of the trend. I think we need further evidence of reversal before we can start to look for a sell opportunity. I know that Friday's candle looks impressive, but I don't want to assume that until it makes a new lower low for the dollar franc. So for the time being, I'm looking predominantly for going long into support, break above resistance, but watching for the potential for a breakdown of the 100 period moving average, red trend line, and the yellow shaded area for signs of reversal for the dollar franc. Moving on over to the euro dollar, similar situation, yet the opposite situation. The black trend line was a rising trend, red trend line, the falling trend. Let's go ahead and zoom it in here on the chart. I've taken a couple of different Fibonacci retracement levels, one from the high of the red trend line to the low, one from the mid-high down to the low, but that settles some Fibonacci here into the pink shaded area, settles some here into the purple shaded area. Now, if you're looking to go long because of the big blue candle from last Friday, then you're looking for buying opportunities on dips to support, and this purple shaded area may become that opportunity. Now, again, we have this similar yet opposite directional purpose here. We have a downtrend along the red trend line. Interesting here, though, is that we are above the red trend line. The red trend line doesn't really matter how you draw it, whether you draw it for this low down here and you put it like this, or you draw it for this high right here and you draw it like this. Either way you look at it, we're above the red trend line and the purple shaded area. That purple zone is 1.0580, 1.0565. So as long as it's above there, I'd have a difficult time going short in the direction of the trend, Forex Black Book being red, and might be looking for opportunities on intraday basis to go long here, targeting back to the pink zone, which isn't really that far, 106, 106.20. Back to the pink zone is obviously our current resistance. A break of the pink zone, though, I think we look for a push back into the 100 period moving average and the green shaded area. Of course, back under the purple zone, we start to look for a pullback for the US dollar, or a surge in favor of the US dollar would send us back under the purple zone to the yellow zone, maybe even another challenge of the orange shaded area down towards the lows. But definitely watching this area between the purple and the pink shaded areas. Let's go ahead and zoom it in. to the 4-hour time frame. We see the touch of the pink zone on Friday, rapid reversal back to the purple zone. So as long as it sits on top of here, though, I don't think you want to go short on top of that purple zone. But more likely, as long as it stays on top or inside that purple zone, we could be looking for opportunities to go long, targeting back to the pink shade area on an intraday basis for the euro dollar. Let's take it back down to the GBP USD. Some interesting things. I've zoomed it way out so we can see the history back to September, October of last year. And this black box that you see here, bottom left-hand corner, the black box, orange, purple, blue. I point that out because that's where we are right now. We're into that orange shaded area over here on the left-hand side. So we had a significant fall off last week down here to the orange zone, but we're just kind of sitting here. So we need to remember this back here, where the market has found support, resistance, congestion before, but we're definitely looking at this area over here on the right-hand side. Let's go ahead and zoom it in. Take a look at last Friday's candle. Again, a dip to the purple zone, pull back into the orange zone. I would have a difficult time going short as long as it has not broken 1.2260. That's the bottom of our orange shade area. Take a look. It's been sitting here 1, 2, 3 days now. Zoom it in one more time. 3 days now sitting on top of 1.2260. So I don't think I want to go short unless it breaks underneath that orange zone. Open and close underneath it here on the daily would give us the most likely scenario for that. Back above the orange zone, we could be looking for some reversal. It wouldn't be too hard to see that with last Friday's candle, with that blue candle, longer wick on the bottom. I would like to have seen that wick a little bit longer, though. 4-hour time frame doesn't really change a lot. The fact that we saw congestion, the dip to the purple zone, the rally, and now we're just sitting around this orange shaded area. Again, difficult place to go short, and really risk reward wise, we might be looking at a better opportunity to go long. The trend is clearly down, so if you decide to go long, remember, you're bucking the trend and you need to be using appropriate risk strategies. I think I'm going to let this settle out for a little bit and see if it's really going to make that reversal to go higher, or if it's just going to break down through 2260 and go lower in the direction of the trend for the pound dollar this week. Take it over here to the USD CAD. Clearly, it's been on the rise. Without any question, it's been on the rise. We're back above the blue trend line. We're back above the 100-period moving average. But right now, we're running into resistance. Let's go ahead and zoom it in one time here. Take a look at the blue shaded area, 1.3400, 3420, 1, 2, 3 days now finding resistance. It's a difficult place. Even though the trend and momentum have been bullish, it's a difficult place to go long because 3 days have found resistance there. If you're going to go long, one of two things needs to happen. It either needs to break through this blue zone, 3400, 3420, or dip back down to the purple zone to give you better risk versus reward. That gives you better risk versus reward if you're going to go long, because right now your reward or your profit is being capped by the blue zone. You want it to come back down to the purple zone to increase that potential reward. Now, a break of the blue zone changes it to go back up to the green zone up here into the 1.3475 level. So right now, not a great place to go long. Maybe an intraday opportunity to dip it back down to the 3350s, the purple zone, from resistance at the blue shade area. Forex Black Book screen, the momentum clearly is bullish, so be careful about going short, but intraday wise, you might find a little opportunity back from the blue zone, back to the purple zone. 4-hour time frame doesn't change it. You see the resistance there at the blue shaded area. Very difficult place to go long right now into that blue zone, but maybe an intraday opportunity for a dip back to the purple zone for the dollar CAD today. Let's take it on over to the US yen. Look at the blue box here. The blue box shows us the range that the US yen has been in for the past several weeks, really. 100-period moving average, we tapped down into that several days ago. Now we've bounced off of it and come back up towards the top, basically, of our range, the blue box that you see here on my chart. Let's zoom it in a little bit. Green shaded area, resistance, resistance. Not too hard to see that. We've seen resistance at the green zone. If we're going to go higher, it will need to break that green zone, which it hasn't done. We've dipped back down to support, obviously, which is the yellow shaded area right now. So not a great place to go short, even though it's going down Friday and so far today. Not a great place to go short above the 113.80 level, because it's obviously finding support there. If you're going to go short, it needs to break through the yellow zone, and then you're looking to just to target back down to the orange shaded area here. So not a long way to go if it does continue to go down, but definitely something to watch for on underneath the 113.80 level, back into the 40s and the 113.15 level. the orange shaded area. Now, if you're looking to go long, I think it needs to get back above 114 before we look for a long opportunity. The 4-hour time frame doesn't really change all of that, just gives us a little bit of a zoomed in view. And again, we're underneath that yellow zone. So at least right now, there's no long opportunity, no buy opportunity. It would have to get back above the yellow zone. But as long as it stays under that yellow zone, and the longer it stays under that yellow zone, I think we look for the potential for it to head back down here to the orange zone. And the best example I can give you for that is just looking back to the left, right here, where this little circle is getting ready to be. That's the best example I can give to you, because it came off the green zone, settled down under the yellow zone, hit the orange zone, eventually even went down to the purple zone. So watch for it to stay underneath there today to give you confidence that it's going to go back down to the orange shaded area for the US yen. AUDUSD, Australian versus US dollar, was an uptrend. Not too hard to see that. Found congestion at the green zone. We've spoken about that for weeks now. Falling off of there under the blue trend line, went down all the way back down to the purple zone, even touching back down to 75.40. Something interesting to look at is this black box back here. We've seen resistance underneath the purple zone before, support at the yellow zone. So I think you could stretch that over and say as long as it's underneath that purple shaded area like it was inside the black box, there's potential for it to go down towards the yellow shaded area into the low 75s. Now, if it breaks that, gets back above the purple zone, we could be looking for a pullback up towards the mid 76, 76, 40, 55 is the orange shade area. So needs to stay under there if it's going to go lower. Back above there, we could be looking for some pullback here for the Australian dollar. 4-hour time frame won't change that really. It just gives you a different vantage point. Take a look. We're under that purple zone. So again, that tells me again, just like in the black box on the left-hand side, as long as it's underneath that purple zone, there's more likely resistance, and you don't really want to buy it right now under resistance. In fact, if it gets back underneath 75.85 and underneath the purple shaded area, it might be an opportunity to take this short once again on the Australian dollar. Let's take it on over to the NZD USD, New Zealand dollar, US dollar. Very similar to the Australian dollar. We had the black trend line. We changed direction. We started going down. We've been selling this for weeks now, making profit on the way down. We're at a difficult place to go short because obviously it's at the bottom of the trend. Whenever you're at the bottom of the trend, not the best place to go short. And so right now we're at the bottom, just above 7,000, 7,020. So I think it's a difficult place to go short unless it stays under the orange zone. Again, look at this little black box over here. Under the orange zone, the pink zone is your support. Under the orange zone, your pink zone is support. So for the day today and maybe the rest of this week, as long as it stays underneath 7,020, there's the potential that it continues to downward slide back down here to the pink zone, 69.79. Well, it's actually 69.80 down to 69.60 is the pink shaded area. And of course, if it can break through there, we're likely challenging the lowest lows here on the chart back down into the green shaded area. And of course, back above 70.40, back above the orange shaded area where we're currently challenging, we could be looking for some pullback. I want to do one more thing. Let's take Fibonacci from the lowest low of the black trend line down here at the bottom of the chart to the current resistance high. And interesting enough, that puts the 786 fib right there at the pink zone. So definitely another encouragement that it could take a turn down to the pink zone is the 786 sits right in the middle of that pink shaded area into the 69.70s for the New Zealand dollar this week.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.